For those of you who are currently here, welcome to the Launch Tennessee Southeast Capital Call. We've got a mixture of folks calling in from Kentucky, Georgia, Florida, North and South Carolina. So definitely want to thank you all for taking time out of your busy schedules to attend. In the past, when we've had this call, it's been primarily a focus on, hey, here are the venture deals and opportunities happening within the state of Tennessee. And then we would receive feedback from you all on like what's happening in your neck of the woods. But now we're doing somewhat of a shift where we're doing a high level overview. We're going to pivot back and forth between here's a high level overview of the region as well as an overview of the state of Tennessee. And Ziggy, can you go to the next slide, please? All right, so we've finished with the welcome. We're going to touch on, as I said, high level overview of the entire U.S. Southeast region from a deal volume, deal value, as well as industry focus. And then I'm going to pass it over to some of our fund managers. It should be around 5 individuals that are speaking, and they'll touch on, hey, this is the overview of their fund. This is what they're currently focused on. This is what they're excited when it comes to an investing/venture standpoint. And then next, we'll pass it off to our keynote speaker, Bruce Graham. Bruce is a wealth of knowledge. Myself and others at Launch Tennessee are truly lucky to have him as a speaker. He'll be touching on a 30/40-year overview of key selected technology trends that really shaped the investment landscape. So it'll be a good takeaway in terms of how do we connect what's happened in the past to a current. How do we really account for something that might be either a rideable wave or a true wipeout? And even though I have Q&A/comments listed towards the end, this is definitely more of a conversation and not a lecture. So feel free to interject or raise your hand or make a viewpoint or a comment if there's anything that stands out to you. All right, next slide. So hello everyone, my name is Lasagna Reynolds. I serve as a senior associate here at Launch Tennessee. Been here since mid-October, but prior to being in Nashville, I served as a venture capitalist in Houston, Texas, primarily helping local small stage companies. And then prior to that, I got my first stint in VC in Tulsa, Oklahoma, working for a family-backed office. And then I originally started off my career as a management consultant in Houston, Texas. So a lot of oil and gas-based deals, a lot of massive software implementation, but definitely have been enjoying my time both here at Launch Tennessee and in Nashville, seeing this ecosystem, how well connected it is. Normally in other locations, especially whether it be like a coastal city or even at Houston, kind of like jump through hoops to get all of us being peers within the same room. It often has to be an expensive conference, or as I said, it's a lot of email chains. But it's really pleasant knowing that we could all get together for the Southeast call and share insights on this is what's happening within our particular region. And then a quick overview of Launch Tennessee. We are the state-backed venture capital firm for the state of Tennessee. We are industry agnostic, but we focus on anywhere from pre-seed, seed, all the way up to Series A/B. We have 2 funds that we're actively investing out of, but primarily focused on our regional seed fund, where our checks range from $25K to $250K. And then later on in the year, we're going to ramp things up with our growth fund, where our checks range from $250K all the way up to $3 million, but on average around $750K for that growth fund. And then, so you can touch on the next slide, please. All right. So starting off with the Southeast deal overview. So this is going to be a comparison of what's happened in Q4 of 2024 to current day. So starting with deal volume. This actually kind of surprised me because there was a slight drop from Q4. And normally we're used to the November, December time period being like a wind down and things really ramping up come January, February. And granted, Q4 isn't officially over yet, but as of now, we've seen just a slight decline. I think Q4, the exact numbers were around 337 that occurred within our respective segments. That shifted towards 270-ish, 280 number. And then from a deal size perspective, I decided to go with deal size instead of valuation because I just wanted to shift towards okay, what amount of capital is being raised within the region. And for the most part, it's been fairly stable. I think there's just a 1% shift from Q4 2024 to the present day. So not much of a change. And then from an industry focus, it was highly fragmented, which is a good sign for the South. It's not too heavily dependent on one particular industry, but one industry or one type of industry that really stood out was the business/productivity software. And then shifting towards the state of Tennessee, from a volume perspective, it was fairly stable from Q4 2024 to Q1 current date. And then what really stood out was a deal size towards the end slash Q4 2024, the average deals in terms of size of the checks slash size of the rounds, that was around 7.5 million. But then throughout this quarter, I've seen the majority of deals, or I've seen the average double to 15 million. And then once again, with it being Tennessee, this didn't necessarily surprise me, but the key industry where a majority of those deals occurred was in healthcare slash biotech. The next slide, please. So focusing on the region itself, in terms of like key trends slash investment distributions, the state of Florida was very dominant in the region in terms of 137 deals occurred. And to be more clear, majority of the data is sourced from PitchBook. I had a specific filter where I focused primarily on angels, early stage, late stage, and seed rounds. And that was just to be reflective of our audience. For the from a sign-up perspective, that's where the majority of folks selected their primary focus was on. So I wanted to make sure that data was like relevant to what all our focus is. And then with Florida being crucial in the region, certain states such as Mississippi and Alabama, they're on the lower tier end. Mississippi isn't called out here, but they had one deal that's occurred so far within the quarter. And then Tennessee's around the middle, around 12.8% of the deals occurring in the state or occurring in the region. And then from a deal by stage perspective, they'll call out that majority of the deals are within that later stage, which is a good signal that majority of other investors are becoming risk adverse and they're preferring stable slash established companies that are experiencing a Series B, Series C, or even a Series A2. So as of now, I find that to be like just a reflection of the broader economy. There's been a lot of shifts and switches around, especially with the current administration in point. So it's a little bit more challenging for angels slash early stage investors to feel confident in a particular startup and feel like feel like it'd be a valuable use of capital to invest in early stage deals. And then next slide, please. Now, pivoting back to the state of Tennessee, from a stage overview perspective, this is a good reflection of the broader region where, once again, the majority of the deals are in a late stage perspective. And then looking at the industry, I touched on this within the first slide, but the majority of the deals are from a healthcare and biotech standpoint, which is very relevant to what we here at Launch Tennessee have been seeing, where majority of the founders, when they apply for either a regional seed fund or our growth fund, they're listing that they have some sort of healthcare, whether it be a healthcare as a service or a healthcare analytics company. Those are the ones that are applying and getting the majority of the approvals from a deal perspective. And then closing it off on my end, just want to make a couple call outs on some notable deals that occurred early this quarter. For one, flock safety, definitely a juggernaut, but that consists of just public physical safety. So think of like crowd control, think of method to combat terrorism. So that company actually partners with various police departments and just provides like secure video output and spotting like any potential threats. And then another deal that touches on data slash security is actually 360 privacy, but instead of physical security, it's more so, as I said, data, thinking about like threats to security, hacks, etc. They recently closed a $36 million round. And then from an early stage perspective, a couple of the deals that really stood out were both blockchain and reservoir. Touching on the current administration, we've seen within the news and within the reserves they've established, they're a lot more friendly friendly towards crypto slash alternative assets, which to me, reflects on why blockchain, why reservoir were able to successfully close their rounds during this quarter. And touching on the fact that we've seen several healthcare related deals. There's Oracle Forum Value Network, which is the healthcare as a service based deal, and then Orbital RX, standard pharmacy slash highlighting the supply chain of available prescriptions. So those are a couple of the companies that were able to close off their rounds for Q1 of 2025. And then this is one statistic that we're looking to change, but as of January 2022, there haven't been any full like fund closures within the state of Tennessee, or no Tennessee funds have been closed since 2023. We have seen certain funds like launch and announce they're in the process of closing off their first fund one, which is something we'll be able to touch on in the next slide with one of our speakers who I think he should be on the call. Yeah, he's on the call. I see him. Hey, Eric. But as of now, it's been a little bit more challenging for early slash solo first time GPs to close off their funds, especially within the state of Tennessee. And then reflective of Launch Tennessee, there's a call out of how a majority of the funds in Tennessee folks are industry agnostic. And then once again, reflective of the state, there's a key focus on both health tech as well as fintech. All right. Now transitioning towards the fund manager insight. So within this portion of our Southeast Capital call, I've been able to select slash call on a couple different fund managers to just highlight this is what their fund is focused on, provide a brief introduction, and really touch on what they're excited about. So Eric, feel free to come off mute and really kick things off.
All right, thank you for the great introduction. So I'm excited to join the call today. My name is Eric Hines. I'm managing partner of Hines Ventures. We're a pre-seed and seed stage medtech focused fund based in Memphis. And some of the things that I'm excited about are just the strong deal flow that I'm finding. Our fund is unique in that I've got 23 years of operating experience in the medtech industry, starting out as an engineer, then moving into marketing and most recently corporate development. And I find that the technical founders that I talk to really love to be able to have an investor who could join them early on, not only to provide capital, but more importantly, that operational guidance and help them maximize the value creation opportunities while minimizing the opportunity for creating risks along the way. I've also developed strong relationships with Vanderbilt, so I'm looking forward to being able to work with them and their team on ways to be able to support companies that are emerging out of their institution. So I'm currently in the process of planning the second closing for the fund. So if anybody's interested in learning more, I'd love to talk to you. Thank you.
Thank you, Eric. And then if we could pull back up that slide. I don't see a Marty on the call yet.
Patrick's here.
Patrick's here. Patrick, would you like to kick things off next, please?
Okay, thanks a lot. I'm Patrick Taylor with Tech Operators here in Atlanta, Georgia. We were founded in 2008, and we're on our fourth fund. It's a $200 million fund. We've done the first close, and we're very focused on cybersecurity. Our returns in cybersecurity over the previous funds have averaged a MOIC of 3.0x and a 50% net IRR. So it's an obvious reason to focus. So why the focus on cyber? For one, a number of us were part of this company called Internet Security Systems. So we were the first company to go public in the cybersecurity realm back in the 90s. But what's most compelling about this market is it's a $200 billion market with a 12% CAGR. And why is that? It's almost kind of recession proof. And we believe the reason is because you've got actual adversaries out there, right? They're back in the day, it was just hackers that were having fun and maybe would break in your computers. You've now got nation states, North Korea, Iran, Russia, that are doing this because they are generating hard currency with it. You've got criminal organizations that are basically for the same thing. The short story of this is Bitcoin has enabled a payments infrastructure for doing cybersecurity hacking. So, these organizations, whether they're stealing your IP, stealing your data and threatening to release it to the public, or tying up all your systems with ransomware, it's a real problem, and it's a growing problem, and it's not going away. If you think about how Amazon Web Services lets you go rent this, that, or the other to build something, the same thing exists on the dark web. There are hacking services available for hire, and I can go stitch together 2 or 3 of these and come up with a program to hack into computers. And we think AI is also a real force multiplier in this. So you're certainly seeing a lot in AI to help a cybersecurity professional defend their company or whatever. But the same thing is happening on the other side, right? Hackers are using AI to generate new phishing emails, new attacks, what have you. And sort of the interesting thing is the hackers can afford to be less careful. If I'm defending my organization with AI, I have to make sure it works right. If I'm trying to hack into something, I can try anything. If it blows up, it doesn't really matter a lot to me. And then the other interesting dimension of this is AI is going to have to be defended too, and it's going to have to be defended in its own unique ways. So pull all that together, we're very excited about the opportunities to invest in AI. And we kind of like Eric are one of the venture firms that believe prior entrepreneurial experience matters a lot, is relevant. And so we're all everyone at Tech Operators is a former entrepreneur, and as I'm fond of saying, between the group of us, there's probably no mistake at least one of us hasn't made. So we're hopeful to be helpful with our entrepreneurs. So thanks a lot for the time.
Perfect. Yeah, that's excellent. And then Darren, I believe I saw you on the call.
Yeah. So thanks. Appreciate the opportunity, and thanks for what y'all are doing and launch to continue to build up the ecosystem. My name is Darren Burrell. I'm the founder and managing partner of Veteran Ventures Capital. And we're a VC firm that was founded in Knoxville, Tennessee, right around 6 years ago. And we invest at the intersection of dual use technologies and veteran leadership. And so I would say that we have had a really great run with Fund One. That was a $20 million fund deployed across the country, but mainly in national security and defense arenas that highlighted veteran leadership. I'm a career Air Force guy, did 21 years active duty, all of it in the financial management career field. So I like to say I didn't fly the planes, I just paid for them. Had a great time doing it. And we take the skill set that we've learned, 3 out of the 5 of the general partnership are Air Force veterans, and also successful in the private side as well. And so what we typically invest in Series A, up or down one, so we can lead in the seed round and sometimes in the A, and then participate in higher rounds, especially when we follow on with our companies. What's a little bit apropos to this group is we have a strong presence in Tennessee. In fact, as part of our Fund 2 raise, the state of Tennessee and their SSBCI program did invest $3 million, which means we spend that money plus another $3 million. A total of $6 million is allocated for Tennessee. And we're excited about that because we have great opportunities in some of the dual use areas, especially with some of the lab and military facilities in the state. One of my partners, Paul Woolard, he is based out of Nashville, and I think he's joined us as well today. And one of the things that we've done, in addition to the investments in Tennessee, which we did in Fund 1 and kind of committed to doing in Fund 2 as well, is building up the veteran ecosystem as well. Paul hosts quarterly what are called VBC meet and greets within the Nashville area, and we have upwards of 100 or more that attend, and it's really nothing more than a networking and opportunity to connect either transitioning veterans or young veteran entrepreneurs with successful business people in the community, and really help connect more dots. So we're committed to the ecosystem. We're committed to Tennessee, but we're also committed to the veteran and the veteran entrepreneur and national security. Our second fund is almost fully capitalized. We had a $50 million target. We're at about 48 million right now, and we anticipate the final closing early this summer. And really excited again. Thanks for the opportunity, and look forward to doing some great things in Tennessee together.
Of course. Yeah, thank you for that. And then last but not least, David, I believe I saw you on the call.
Yes. Hello, my name is David Connor. I'm the CEO and co-founder of Rare Disease Data Trust. We are essentially a ML AI loss rare disease analytics solution to healthcare. Rare disease is less than 200,000 patients in the US. There are 7,000 rare diseases. 1 in 10 people have one of these rare diseases. Before 1991, there were no therapies for these 30 million US patient populations. And today there's over 600 FDA approved therapies for over 1,200 of these conditions. This is where really some of the most exciting work is being done in biotechnology. And these are curative and life-saving therapies. These patients typically in healthcare experience a 5 to 8 year diagnostic odyssey bouncing around in healthcare from, well, they'll see as much as 10 providers, be misdiagnosed, mistreated for 5 to 8 years. So progressing painfully and needlessly while there are miracle FDA approved breakthrough therapies for these desperate and vulnerable patient populations. And so we really solve this problem for healthcare. We do remote AI analytics in their own secure data environments against their de-identified data sets. And we deliver significant new revenues to healthcare through a series of data licenses when we deploy these foundational disease models against their proprietary, clinically actionable, patient consented data sets. And we work under the headship of the patient's consented provider. And we essentially close this care gap really relatively quickly and easily. This technology is spectacularly good at finding these predictive patterns of presentation in the clinical record. And we're able to actually deliver on the promise of the reason we digitized healthcare in the first place, which was so that we could close these care gaps in service to the provider and the patient. Manufacturers of these therapies, who spend on average a decade and $2.9 billion per asset with an 80% failure rate, launch these breakthrough therapies into markets that are already minuscule and very suppressed because of this diagnostic odyssey problem. And now they can fund our solution, which creates this compliant and significant revenue stream. We have currently a seed plus round, which has 300K remaining on it. It was originally in $1 million at a $10 million post valuation. We are commercializing as we speak and will deliver significant revenue this year. And we're a first to market position in this solution where we found a keyhole regulatory access to do what healthcare really never will on their own because they lack the time, tools, and incentive, and what manufacturers are legally prohibited from directly funding. And so we found a way to essentially function as a diagnostic Switzerland and deploy this magnificent technology to this very significant problem. And again, this rare disease sector does about 350 billion in revenue annually, and is forecasted to go 3x by the end of this decade. So exponential breakthrough miracle drugs coming through, and we're going to help optimize these assets for the benefit of the patient.
Yeah, thank you, David. That was definitely a different perspective. And you're highlighting an industry that relates a lot to the data we're seeing, emphasis on healthcare/bio. So definitely thank you for that. Then I'm not sure if Marty was able to join. He might have been tied up, which is fine. I'll just message him. Oh, I see. Okay, he's on.
I just joined actually.
Okay, perfect. And we can hear you too. Yeah, hey, joining for this right on time. Would you like to give a brief presentation in terms of, hey, here's your background, focus for your fund, and what you're excited about?
Absolutely. Thank you very much. I apologize for being a little bit late. I actually had a different link for whatever reason. And so I was stuck in another room thinking that I was there and it was not the correct one. So quickly I had to go back.
Sorry.
But anyway, like you said, my name is Amarte. But you actually have the picture of my cousin, Fred Swanica, who is a CEO and global director for Standout Technologies. So that's another huge VC fund doing huge waves. So that's his picture there. So I feel a little bit flattered that you could not get my right picture, but that's okay. But anyway, like you said, I work with a company called Black Pearl Global Investments. We're headquartered in Charlotte, North Carolina. By way of background, originally from Ghana, moved to the States for school, went to a college called Davidson College, did that for a couple of years, graduated, and then he went into banking. Did banking for about 8 years with Wachovia, which is now Wells Fargo, Fifth Third Bank, And then I transitioned onto the founder side, went back to Africa to start up a multi-million-dollar business. I exited that in 2020, came back to the US to set up a fund, which is basically a healthcare fund, a $25 million healthcare fund focused on healthcare, especially in North America, the Caribbean, and Africa, sub-Saharan Africa, because that's my home. But anyway, we've been doing this for the last couple of years. We've deployed capital. We've been able to fund probably about 6, 7, 8 different founders, specifically 70% in the US and I think 30% in sub-Saharan Africa. What I find exciting about this space is, the other colleague said, all the emerging technologies, especially in AI, when it comes to the healthcare sector, is fascinating, is exciting, and I think that is groundbreaking. And so Black Pearl is positioned to try to do our best to be able to deploy capital where we see the need is. So, for example, in terms of our thesis, we're looking to try to, make sure that healthcare is much more accessible to a much more larger population. We also want to make sure that healthcare is less costly. And at the same time, too, we want to make sure that we make sure that the determinants or the outcome is much better than what the initial outcome should look like. So in a nutshell, like I said, we're doing incredibly well. We've been able to raise about 60-70% of our fund in the last 24 months. We're looking to close out hopefully in the next 6 to 8 months with a couple million that we're talking to some institutional companies in relation to that. But we're very hopeful, and we're looking to deploy as much capital to all the founders out there who are doing incredible stuff in the healthcare space. And we want to make sure that Black Pearl is positioned to take advantage of that, and as well as to make sure that we get and return capital back to our investors who have faith in us. So hopefully that gives you a nutshell, very succinctly, very straight to the point about who we are and who I am. Thank you.
Yeah, thank you for that. And once again, apologies for the photo mix-up. I do know, well, I don't personally know Fred, but I should have caught that on my end. So apologies.
That's fine.
Okay. Ziggy, I believe we're ready for the next slide. Sitting next to me in the room is Bruce Graham. Bruce is equivalent of the LeBron James / Larry Bird of basketball, but bringing us a venture capital perspective. The man just keeps on going and going, and he's truly like a wealth of knowledge. You will see, if we could go to the next slide, please. We'll see that he's had a total of 3 decades of backing successful innovation, over 20 plus positive liquidities, and a very solid return, both from an IRR and cash on hand perspective. Bruce, I can go on and on about how impactful you've been both for the city of Nashville and the industry overall, but I'd love to pass it on to you.
I can use this slide as perhaps an intro, right? So first, I'm delighted to be here, and the previous speakers from the region show the quality of what's happening in the region. It's really heartening to see. I'm a Silicon Valley guy since 1982, when I graduated from college in the Northeast and as an engineer and moved out to build chips for Intel back when silicon was made in Silicon Valley, right? So I've been fortunate to see a lot of the trends and the waves. One thing you figure out pretty quickly, it's pretty humbling. Once you think you've got something figured out, you actually don't have it figured out, right? So that's one of the kind of the fun trends. Look, I moved out here 3.5 years ago. I moved 2 blocks from the Lunch, Tennessee office here in Germantown and got to know the guys here pretty quickly, right? Lindsay, I knew Monique before Eller came in to be the CIO. Ziggy, I've known for some years. Avery and Lasani, the 2 kind of senior managers focused on investments, working with both of them on Tennessee projects. Right now, we closed a Nashville-based project with alongside the Lunch, Tennessee money with Avery a month or so ago, and Lasani, I think we're working on a robotics project out of Memphis as well, right? So I've been fortunate to kind of jump in here. Context for me is, building chips for Intel in the 80s was a great way to kind of ride one of the big waves, right? If you go back to some of the legendary firms and people, so Sequoia Capital, Don Valentine, if you ask him kind of what were the big waves that mattered, right? And Sequoia, got to remember back Apple, Intel, Google, you could list name after name. He would say, look, well, semiconductors kind of mattered. That was a key piece of the infrastructure that enabled the kind of the PC revolution, which was a big trend. Then, a bunch of things came together and the internet became a platform. And then you could argue that kind of mobile, and cloud are maybe a kind of a fourth trend. And so what I'll talk about here today is given one of the current kind of excitement cycles, one could argue hype cycles around Gen AI, how to kind of view that in terms of cycles, right? And so on this slide, for example, I was lucky enough following the Don Valentine trend. If you look kind of middle bottom, these are companies that were semiconductor and or optical communication components, companies that were acquired by companies like Qualcomm, Intel, Broadcom, PSC, Sierra, so on and so forth, that were helpful to build out the infrastructure that enable communication from PCs and mobile devices, which also were the kind of the founding building blocks of the internet back in the 90s, right? So, it's better to be lucky than smart, but I was a former, silicon guy who had, my last operating job at Intel was have chips built at TSMC in Taiwan, the leading manufacturer of, that enabled the fabless chip model. So I was at the right place at the right time. Again, better to be lucky than smart. Currently, at the top of the page, I'm working on some electrification projects, Celtic and Scalvi, a clean tech project, SkyCool, offloads cooling systems and refrigeration systems were being installed in 14 Target stores first half of this year. And Latent AI, where I'm kind of the founding chairman, company backed by Jurgensen and other good backers, enabling one to quickly implement efficiently AI models and update them and secure them at the edge. By the way, the government and the military really care about that a lot. They want quiet, small models that can run maybe off a battery for long periods of time. So the lead customer there. So that gives you a perspective on this page. Why don't we jump into the next slide and talk about waves, right? So a little context on this slide. I gave a presentation like this 7 years ago, and at that point, the hot cool thing of that moment was blockchain, crypto, and tokens. Right? Everybody thought that was going to kind of take over the world. And I'm not saying that cryptocurrencies don't matter or the blockchain isn't an important building block, but it really hasn't turned out the way everybody at that conference had hoped. Right. So this slide, if we focus maybe on the bottom of the slide, this is the semiconductor kind of PC wave. Back in the 80s, a set of technologies came together, right place, right time, and formed what was a very rideable and big and decade-long wave, right, that enabled the personal computer, right? Again, I had the front row seat. We were shipping 286 chips that, built the first IBM PC AT in 1984. You had rotating media disk drive. You had Bill Gates's operating system, first DOS, later Windows. And you had, the big storage was rotating media. Your computer spun up off a disk drive, right? Of course, that doesn't exist anymore because flash memory took that over, right? So, what's interesting is that if you kind of fast forward to the answer, a bunch of innovations enabled, the iPhone as a device and the wireless communication, 3G, 4G, and 5G enabled that device to be interesting and useful, right? So I think we all kind of know that, and that's arguably the fourth trend, right? The mobility everywhere. But there were several trends that if you were, imagine you're a surfer, going back to the surfer analogy, and it's 1992, and you're in Silicon Valley, which is where I was, and the venture business at that point in time is a $2 billion business, not a $100 billion business, but a $3 billion business during that time period. And maybe 10% of the money, the smart money from Kleiner Perkins, AT&T is a big investor, is investing in pen computing. And this was a major trend. Companies like EO, Go, Momenta, and others raised tens of millions of dollars, which is small money today, but back at the time was very, very big money, right? So pen computing was a thing, right? And it turns out, so there are rideable waves and then there are wipeouts where you get, get shot on the beach. This was one of those waves where you want to catch it, you swim real hard, and the wave just kind of goes on by, and you can't ride it. The bottom line is the pieces weren't there, right? You needed a digitizer integrated with a screen to capture the pen. You needed an OS, right? You couldn't use DOS or Windows. That's not a pen OS, right? That's good for text, right? The pieces weren't ready, and so that whole space essentially went to zero. And people don't talk about it because people talk about successes, right?
Yeah, they do.
But again, I think it for me at least, this business, I'll say it again, is very humbling. When you're there trying to figure out whether you're going to swim to catch that wave or not, you don't know what the answer is going to be, right? Analogously, at the same time, you see the Palm Pilot and the Newton. These were early versions of handheld devices. Apple, Newton, the Palm Pilot was an independent company. Those were the trendy, cool devices back then, but wireless connectivity wasn't there. So you were kind of working on an island. The device itself wasn't better than the PC at the task that people, wanted to work on. So these devices were sexy, and if you went to breakfast in Palo Alto, where I lived, in some morning in 1995, you'd see people carrying these devices to be cool, but they were not the devices. It was the iPhone a decade later when a variety of different other pieces, came together, right? So anyway, the humbling nature of trying to figure out what's a wave versus what's a feature versus what's, a full platform, something that you really ride for a decade, right? So let's move up to kind of the center of the slide, and no changing slides. So again, I learned the semiconductor business. So semiconductors are one of Don Valentine's major trends, but semiconductors became the building block of what was the internet, right? So most of my logos in the center of the slide were things that were bought by Nortel, Lucent, Cisco, and others, and built into boxes that was part of a major billions and billions of dollars build out of IP infrastructure, communication infrastructure during the mid to late 1990s. This is a wave that turned out to be it was a very profitable wave. And if you exited your companies early, you did very, very well. But here's what happened is the hype cycle took over. Back then, the internet service providers, including UUNet, were claiming that internet traffic was doubling every 100 days. So internet traffic was growing very, very fast, but in real life, it was doubling every 400 days. So you can imagine if you draw those two curves, they cause for very different requirements in terms of how much stuff you need to invest in and put in the ground, right? So the overinvestment in the 98, 99 timeframe in the box companies and the suppliers thought they were going to be supplying 2 times, 4 times, 8 times as much as actually was demanded, caused a huge bubble. The CommBox, and one of my, and I was a Bessemer venture partners at the time. And so the CommBox deals that got funded were being acquired by Cisco for $400 million based on one unit shipping to a carrier and showing that it worked, right? So that was a tremendous bubble, and it turns out a wipeout wave. I was lucky; many of my building block companies got acquired, and getting to an exit is an important part of being a venture capitalist, right? You can't just build and hope, right? When there is a chance for an irrationally priced exit, just say yes is one of the humbling lessons that I learned. Another wipeout in that space that most people don't talk about is as most people call it Web 1.0 in 1999 was really driven off of search, right? Google search and Excite and Yahoo search. That was a time also where a bunch of e-commerce companies, eToys, Webvan, and others got started. The challenge is a bunch of pieces of the puzzle were not there yet. It took a lot of time, it took a lot of money to build a website that could transact. It was hard to get grandma to give up a credit card. There were trust issues, right? If you're working with narrowband instead of broadband, you can't download images fast enough that we assume today, right? Just downloading images of something so you can judge whether you might want to buy it didn't exist, right? So Web 1.0 in terms of e-commerce was most set aside Amazon, right?
Yes.
It was mostly a bust. By 2003, 2004, Web 2.0 was tremendously successful, right? So again, you're trying to catch a wave. Something you know is going to be successful at some point. If you're an investor or you're a founder, it kind of matters. Your timing being to this business what location are to real estate, right? So we could talk about big data, and we could talk about whether blockchain and Web 3.0 turned out to be big. From my perspective, it turned out to be more of a disappointment. Not that blockchain doesn't have a space, not that Web 3.0 applications aren't important. It didn't turn out the way people thought 6, 7, 8 years ago in terms of size, right? And again, this goes to whether you want to ride a wave or not ride a wave, right? I think in today's world, there's so much talk, and maybe I didn't hear it from our 5 investors and startups, but certainly Gen AI and Chat GPT has been a topic du jour. Everybody has a viewpoint. For me, what's interesting is having been around in the 80s, at Intel, in the 90s doing investment, is that AI has been around forever, right? You can look back to Turing, Turing machines and the Turing test back, early days. You can look at, John von Neumann, the Princeton Institute of Advanced Studies guy who, helped to solve the transportation problem during World War II. How do you get gear from the United States to war fighters across Pacific Islands, right? Trying to figure out ways to build algorithms that can solve problems that humans can't do on pencil and paper, typically, right? And so, what was interesting for me to kind of go back and look at how different pieces came together and how winter followed boom, winter followed boom in the segment. Again, I think it's humbling to understand that the pieces don't come together the way you expect, right? Back in the 50s and 60s, there was a capability, an AI capability that was the kind of the leading thought. Percepticon was the invention, and it turns out a 1969 paper, a guy named Marvin Minsky, who was very famous in the tech world, wrote a paper. Actually wrote a book with a co-author that showed that Percepticons weren't going to be able to solve the problem the way that it was thought, right? And literally, there's something called AI winter that went from 1969 into the 80s, where funding for that space kind of went not to zero, but to very, very low, right? So, it's taken a set of successes. The kind of the rules-based expert system ended up being useful, and it fed kind of almost a decision tree type of decision making, automated by computers, including desktop computers, in the 90s to have an impact on the world. All at this time, on the top of the slide, AI could beat humans in backgammon, then in checkers, then in chess, and then eventually in Go, right? So the set of innovations had almost a set of mileposts when humans were bested by AI, right? For example, the IBM, kind of deep mind, the chess solution space was really based on an invention from John von Neumann decades earlier. The IBM algorithm was based on a minimax type of algorithm where you could take any chess position, assign values to the pieces, assign values to the positions, look forward several steps, and then test in a minimax way, which von Neumann would have recognized, about what the best move was, right? So none of this stuff happens, right away. Sometimes an invention will sit on the shelf for a long period of time, right? Natural language processing, NLP. Back in the 60s, there was essentially what we would today call a bot called Lisa that used and spoke and could listen using NLP approaches, right? So the company Nuance Communication took natural language processing and used that for interactive voice systems. Those annoying systems you call when you get put on hold and you get asked to answer yes or no or this or that, right? So Nuance implemented that. Look, a decade or so later, with compute power and other smarts, we all recognize Siri and Alexa, right? And we're, when our phone starts feeding us up searches that related to something we recently said, we also worry about privacy a little bit too. Right? So it's really interesting to see how this played out. Now, machine learning and deep learning, guys like Andrew Ng kind of made this kind of real on the basis of many of the startups and the projects that I see today. Like I'm an investor in a variety of different funds, including one out of Silicon Valley called Tal Ventures. They're simply taking ML and focusing on business problem X, Y, Z, and W, right? And so it's really taking a tool and applying it to an application, right? And that's what we're seeing. And I think one of the major applications that benefits from AI and ML is computer vision, right? So the ImageNet project, my startup, for example, Latent AI, works with government military customers in really remote, sometimes in skinny environments where you can't use too much compute. You have to be super efficient to recognize situations that then you want to respond to, right? So I think you guys can imagine some of those surveillance and military applications, right? None of that stuff would have been possible, a decade ago, right? So it's really interesting to see that happen. Now, the current hype is around, what I call supercomputer AI, and it was really kicked off with, ChatGPT and Gen AI from OpenAI organization, with the belief that, and it's been spectacular to watch, right? Work that, and it's, if you're a human being, you're also a little scared. I've got a boy graduating from college. I say, don't take a job that can be chat GPT'd into irrelevance, right? It's just really interesting to see how tasks that would take days can now be accomplished in an hour or less. Taking what a spreadsheet does for numbers, doing for words and ideas, right? So if you go back to 1980, before the PC and before the spreadsheet, before Lotus 123, you would literally, type up IBM cards with Fortran, run them through, a mainframe computer overnight. I did this in a summer job for mobile research and development to work out a cost estimate, right? And if you type one thing wrong on one card, you'd get an error message the next morning, right? So this was not a fast, interactive way. This was grunt work for, young people, right? 4 years later, you're running Lotus 123 on a PC, and you can iterate and you can do what ifs that were absolutely unimaginable 4 years ago. In some sense, this is what Gen AI has done for routine tasks with words and ideas today, right? So it's real interesting. Now, what does that mean, right? So, this business is humbling. Is this the path to artificial general intelligence? Maybe, or maybe not. Or maybe this is just a tool, more powerful. It's like a spreadsheet for words on steroids, right? A tool that gets integrated into every business and personal process, and just changes how we interact with the world, right? So, and again, it's always fun to see, when, a few months ago, DeepSeek out of China just changed the whole conversation about how efficient or inefficient this needs to be. Do we need to build supercomputer data centers, Elon's in Memphis and all the different ones being built across the world? Because the belief was you need 10,000 NVIDIA GPUs to solve these problems. In any case, so I've been rambling enough. I think it's probably better to have some questions. But again, it's delighted to be here. This business is humbling, and every time you think you know the answer, you paddle hard for a wave, and it doesn't crest. Thank you.
All right. Does anyone have any questions or comments in response to Bruce?
Yeah, if you don't mind, this is David Connor, and I would just chime in on the sort of I see a lot of parallels in having lived through as an adult through the birth of the internet and the birth of AI. And I think ultimately the same lessons are going to apply for those companies that are successful. The technology is amazing, but the technology by itself does not create a market. And it's those who can apply this technology in areas where there's great need, where you can deliver great value, and that there's a business model, and a marketplace for it. And I think it really kind of what the .com bubble bust taught us all is that business model matters, and the ability to deliver, repeating value, that there's a marketplace. And I think that's what's going to be the dividing line between AI companies that are successful and those that are not.
Yeah, that's why I've been interested in, got involved with, getting involved with funds like the Style Ventures I talked about. They're applying it to sleepy places that have been historically sleepy in terms of implementing IT. You look at healthcare, you look at big banks, right? On the trading floor, big banks have been very innovative, but some of the sleepier business processes could really benefit from some smarts. And so it's really take the data you have from that application, take, AI, ML, apply it, become expert at it, anonymize the data, but learn from it so you can sell your expertise to other customers who need the same thing, plus or minus, right?
Right.
Dave, you're the Memphis healthcare person?
No, I'm the CEO and co-founder of Rare Disease Data Trust. We're a startup healthcare analytics company.
Thank you.
Yes. I would also point out, just from Gen AI has gotten a lot of the noise around AI because of ChatGPT. And the way that I think about it is Gen AI is like the English literature of artificial intelligence. We use augmented AI, which is like, math and science, right? So it's massive computing and ability to sort of assess, and mimic human thinking in a way that serves, in our instance, providers. And so augmented AI, I think, is really is a whole nother interesting sector to understand in terms of application, because we don't generate anything. We're just putting all that data to work.
No doubt. In some sense, that's what I've been calling supercomputer AI. There's certain problems that really do benefit from, banging the problem onto 10,000 GPUs for a while.
Yes. Yes.
I can make one comment. Early in my career, I joined a Go Computers as part of that fantastic pen-based operating system, got laid off after 3 months. So,
oh my gosh, you must have joined right at the perfectly wrong time, right before the
at the perfectly wrong time, and was left with a 9-month-old and a pregnant wife and 2 weeks of severance.
I was lucky enough to miss the entire pen computing wave. I was completely confounded by it. I didn't want a pen interface myself. I like pencil and paper still.
Yeah, but I think the big lesson I remember at the time, they were talking about all these cool things you're going to be able to do and make airline reservations and whatnot. And I remember thinking, well, but how do you do that? There was no internet available, no websites, all that. So I think recognizing that all the other things that it needs to support this magic vision just aren't there, which by the time an iPhone comes around, it is there, and it made all the difference in the world, right? It's looking for that supporting. How hard is that supporting stuff going to be to build out?
Yeah. I think it's real interesting because, Kleiner Perkins and AT&T were big investors in Go and EO, right? And AT&T was already running ads, which were probably 10 to 12 years before the iPhone. They're running ads of kind of some business executive on the beach with some handheld device working, right? The way that you could work maybe in 2020, but they're running the ads in 1995. And so I think AT&T got a little bit infected with their own vision and missed the timing part of the equation.
But I'll mention one other lesson learned as an employee is I got access and a chance to call one of the major venture capitalists back in Go. And he was highly enthusiastic, and I've come to realize later, what did I expect him to say? Right, that was the dumbest reference call I've ever made.
Was it Kevin of Kleiner?
Yeah, I'm not going to name names.
Oh, look, he's a good guy. He's a good guy. You know, we all get infected and sometimes we're wrong, right?
Yeah, but you can't call a VC about one of their portfolio companies and expect them to say, no, you shouldn't join that. That's not going to happen.
Yeah, that's an important lesson to learn, isn't it?
Yeah.
Thank you.